Hey everyone, welcome back. Ready to really dig into what's going on with the U.S. stock market.
Yeah, it's been a wild ride lately.
It really has been. The Dow's having its longest losing streak since, 1974.
Wow.
Yeah, I know. So we're using this recent analysis we found really breaks it down.
Yeah,
And, well, it is happening while the U.S. economy seems to be doing all right.
it is a bit of a head scratcher.
Yeah. So let's jump in. So our source is pointing to what the Fed just did with interest rates, cutting them again, 25 basis points.
Right, third time in a row.
Yeah. And, I mean, the market kind of saw that coming. But the thing is, the Fed also kind of signaled they're going to slow down on the rate cuts.
Yeah, and that's where things get interesting. See, the Fed is trying to do a balancing act, right? Keep the economy growing, but also make sure inflation doesn't go crazy. So this whole idea of a neutral interest rate is key here.
I'm not sure I'm following.
Well, it's basically the rate that keeps the economy humming along at a good pace without overheating.
Okay, so I'm picturing, like, finding the perfect spot on a gas puddle.
It's exact.
Not too much gas, not too little.
Yeah. But it seems like investors, they were hoping for a bit more gas, if you will.
More oof.
Right. More aggressive cuts, more stimulus to really get things going.
I see. So when the Fed was like, whoa, slow down there,
Yeah.
everyone got nervous.
Exactly. And that's what spooked the market. Yeah. And that's why we saw those big indices like the S&P 500 take a dip.
And the bond yields, they jumped up.
They did.
Okay, so that's like the 30,000-foot view. But I always wonder how all this high-level stuff actually affects, everyday people.
Right.
Like, I feel it when my credit card interest rate goes up.
Oh, tell me about it.
Right.
It's like, think of the Fed's benchmark rate as the mother of all interest rate.
The OG interest rate.
Yeah. It affects everything, par loans, mortgages, and yeah, those lovely credit card rates.
Ugh, the worst.
So when the Fed raises rates, borrowing just gets more expensive, and that makes people think twice about spending. Okay, yeah, that makes total sense. But here's the thing. Our source also says that the Fed's own projections, they're still saying the economy is going to be good this year.
Right.
So why all the caution about the coming years? I don't get it.
Well, remember that balancing act we talked about?
Yeah.
The Fed, they're worried that this strong economy, it could actually cause inflation problems down the road.
Huh. Like a delayed reaction almost?
Yeah, so by easing up on the rate cuts now, they're trying to keep things from overheating and hopefully prevent a sudden surge in inflation later on.
So basically trying to avoid a nasty economic hangover.
Exactly.
I feel that.
But we can't forget about, there's another big thing we got to factor in here.
Yeah, I was just thinking that Trump's fiscal policies.
Right. Our source specifically talks about tariffs and those corporate tax cuts.
Right. And the immigration plans.
Yeah, those are all things that could potentially, push inflation up.
And that makes the Fed's job even trickier, right? Absolutely. These policies add a whole new layer of, complexity. It's tough to predict how it'll all shake out. Like with tariffs, for example. Those can push prices up for us, the consumers, while the tax cuts can stimulate the economy, which could lead to more spending and, more inflation.
I see.
It's tough. The Fed has to try and anticipate all these moving pieces. Not easy.
So the market's basically having a mini freak out with all this going on.
Yeah, kind of.
So what's an investor to do?
Right.
Thankfully, our source has some advice. First things first, don't panic sell all your stocks.
Oh, yeah, please don't.
Right.
That knee-jerk reaction almost always backfires, unless you're, a real pro short-term trader.
Which most of us aren't.
Yeah, exactly. Trying to perfectly time the market is, it's basically impossible.
It's like trying to, catch a falling knife. Or...
Exactly. Instead of panicking, this downturn might actually be a good chance to look for buying opportunities.
Yeah.
Especially for companies that are, we call fundamentally strong. They've taken a hit, but have what it takes to bounce back.
Okay, I like that. Looking for opportunities, I like the sound of that. But what does fundamentally strong even mean? What should I be looking at?
It's like, think of it as checking a company's vital signs.
Okay.
Are their earnings solid? Are they making profits consistently? Healthy cash flow?
So basically, looking past the market drama and focusing on the company's long-term, health.
Exactly. It's like remembering that after a rainy day, the sun will come out again.
I like that. Our source also gives a specific tip.
Oh, yeah.
Keep an eye on the S&P 500's support levels. They say the key ones are 5,800 and 5,450 points. What do those numbers mean?
Think of them as safety nets for the market.
Okay.
If the index dips below those, it could mean things are going to keep sliding.
So it's like watching a tightrope walker. holding your breath.
It is. You're watching to see if they're going to, regain their balance or fall.
Okay, so those levels help us figure out how bad the downturn might be. Okay, so that's the overall market. But what about specific stocks? Our source talks about NVIDIA, Tesla, MicroStrategy, Palantir, AMD. Can we go through those?
Sure, these are all companies in high growth areas, lots of potential, but also more risk.
Higher risk, higher reward. Makes sense. Let's start with NVIDIA. What's the deal there?
So NVIDIA, they've been doing great, a market favorite, really.
Yeah.
But they recently dropped below a key support level.
Oh,
Yeah, it could be a sign of more decline.
that's a little scary. What about Tesla?
Tesla, oh man, Tesla's been all over the place.
Yeah.
But it does seem to be finding some support at a certain price level.
So maybe a glimmer of hope.
Maybe. It's still early to tell, for sure.
Right.
But it's definitely one to watch. And it's important to remember these are just signals, not guarantees.
Good point. Got to gather the info and make smart decisions. Okay, what about MicroStrategy and Palantir? What's the source saying about those two?
They're both pretty interesting. I mean, they're both right in the middle of some really game-changing tech MicroStrategy. They're all about that business intelligence, data analytics, that kind of thing. And Palantir, they're more focused on big data for like government and businesses.
Okay, so they're both riding that big data wave. Definitely a hot area.
It is, it is. But what about their stocks? What's the source saying about that?
Yeah, that's what I want to know.
So they've both seen a lot of growth, but they've also got some, challenges ahead.
Oh,
Yeah, MicroStrategy's performance, it's been a little up and down.
okay.
And Palantir, well, they're still not quite profitable yet.
So it's a bit more of a gamble than, say, like a big blue chip company.
Yeah, there's definitely more volatility, but, that also means there's potential for bigger rewards if they can figure things out.
Yeah, that makes sense. High risk, higher reward. Right.
Exactly.
Okay. Before we move on to AMD, there's something I wanted to ask about, this whole technical analysis thing.
Oh, yeah.
The source mentions it as a way to use charts and patterns to predict stock movements.
Right, right.
It seems like a superpower or something, but I don't really get it.
Yeah, well, it can be a really useful tool, especially for, those short-term traders we were talking about.
Right.
The ones who are trying to make quick profits.
Riding those waves.
Exactly. It helps them figure out when to buy and sell.
So it's like reading the market's tea leaves, but with charts instead of teacaps.
Uh-huh. Yeah, I like that.
But, I mean, it's not foolproof, right?
No, not at all. It's important to remember it's just one piece of the puzzle.
So I shouldn't just blindly follow the charts.
Definitely not.
Yeah.
You got to combine it with what we call fundamental analysis. You got to dig into the company's financials, their management, the competition, all that good stuff.
Okay, so it's about looking at the whole picture, the technical signals and the company's fundamental strength.
Exactly. Like being a detective, you got to gather evidence from all over the place.
Yeah. Love that analogy. Okay, let's zoom out for a sec. Talk about the broader market. Is this just a little dip, or are we heading for a full-on bear market? The source seems to have some thoughts on that.
They do, and they make a really important distinction between a technical correction and a bear market.
Okay, what's the difference?
A technical correction, it's like a short break for the market, usually a dip of about 10%.
Okay.
Often triggered by, things like too much buying or profit taking.
Then the market's just taking a quick power nap.
Haha, yeah. But a bear market, that's a whole different beast.
Oh, boy.
It's a much longer decline, like 20% or more, usually driven by some, serious problems in the economy.
So a bear market's like the market hitting the snooze button for a loom time.
Yeah.
Yeah.
And, well, our source seems to think that what we're seeing now, it's more of a technical correction.
Okay, phew. So we're not heading for a bear market.
Well, they don't completely rule it out.
Of course not.
They do say that if those support levels we talked about, those 5,800 and 5,450 points on the S&P 500,
if those break, well, that could mean trouble.
Yikes.
And those unpredictable fiscal policies, they're still a wild card. We can't forget about those.
Right. So we're sailing in choppy waters, but at least we're keeping an eye on the forecast.
Exactly. We're being cautiously optimistic, but prepared for a storm, just in case.
Good plan. Okay, before we wrap up, let's circle back to AMD. You mentioned it's a company to approach with caution. What are the red flags there?
Well, they've been facing some headwinds, The semiconductor market's really competitive right now.
Right.
And AMD's recent performance, it's been a bit underwhelming.
Okay.
So the source is saying, basically, take a wait-and-see approach with AMD. So it's like their engine's sputtering a bit.
Yeah.
We got to see if they can get it running smoothly again.
Exactly. It highlights a really important point, do your homework before investing in any company.
Oh, yeah, that's crucial.
It's easy to get caught up in the hype, especially when everyone's chasing the next big thing. But it's important to, take a step back, look at the fundamentals, and really consider the risks.
This deep dive has been awesome. I feel like I have a much better understanding of what's going on in the market and how to handle all this volatility.
Me too. And I think the timing of this episode is perfect, given all the craziness we've been seeing.
Right.
It's times like these when investors really need clear, concise information,
Absolutely.
actionable information.
And one thing that stood out to me from the source was uh, how much they emphasize not letting emotions drive our decisions.
Oh, yeah, that's huge.
It's so easy to get caught up in the fear and the greed when the market's going haywire.
So easy.
So how do we avoid that? What's the secret?
It's about remembering your long-term goals,
Yeah.
sticking to your plan and not letting those short-term swings control you.
So don't panic sell just because everyone else is.
Exactly. Patience and discipline, those are your best friends in investing.
This episode has been packed with great info. I feel way more equipped to handle all this market turbulence. But before we wrap up, is there anything else from the source you think people should remember? Any final words of wisdom?
Well, I think the biggest thing is the market, it's always changing.
Yeah, like what's true today might not be true tomorrow.
Exactly. You got to stay informed, keep learning, and adapt.
Yeah, it's like the market's a living thing,
It is.
constantly changing, throwing curveballs.
Then that's what I love about these deep dives. They help us stay ahead of the curve.
Totally. And one of the best ways to keep learning is, well, to share ideas, right?
Absolutely. So we want to hear from you guys. What stocks are you watching? What strategies are you using? Share your thoughts, questions, anything.
Yeah, hit us up in the comments. We might even feature your insights in a future episode.
We might.
Like we're all in this together, right?
Right?
Trying to make sense of the market and make those smart investment decisions.
We are. And, even though things might feel a little shaky right now, the U.S. economy, it's still strong fundamentally.
Right, yeah.
And this could actually be a good thing.
Oh.
Yeah. For those who do their research and invest wisely, this could be a time to find some real opportunities.
Okay, I like that. So instead of panicking, let's use this time to learn, adapt, and maybe even find some hidden gems in the market.
Exactly. Remember, knowledge is power.
Yes.
The more you understand what's driving the market,
Uh-huh.
the better decisions you can make. Informed decisions, not emotional ones.
I love that.
Yeah.
So just to wrap things up, what are the key takeaways here?
Okay, so first, don't panic. This dip, it's probably just a technical correction, not a bear market.
Right.
Second, use this as a chance to do your research, maybe buy into those fundamentally strong companies that got hit.
Uh-huh.
And finally, stay informed, keep learning, and remember investing, it's a marathon, not a sprint.
This has been a fantastic deep dive into the U.S. stock market. Thanks for joining us.
It has been.
We hope you found it helpful, and as always, we want to hear from you. Which stocks are you watching? Share your thoughts in the comments, and stay tuned for more episodes where we'll keep exploring this crazy financial world and give you the knowledge you need to make those smart decisions.
Until next time, happy investing.